Well, I'm delighted to be speaking today with Richard Brass, who's the Head of Wealth and Asset Management UK for Berenberg. Good afternoon, Richard.
Good afternoon, David.
So we're about to embark on a number of pieces of content together on a variety of topics in the investment world. But before we discuss some of that, why don't you just explain a little bit about the development of the Berenberg business in London for those less familiar with the business?
Sure. Look, Berenberg's been going for quite a while in London, really since 2000, 2001. But initially, it was very focused on building out our equity research business. And that has continued and grown organically. And to date, we have around 150 analysts covering over 1,000 stocks. And that continues to grow. And indeed, an office in New York has been established a few years ago. Naturally, off the back of that, when you think of Berenberg having two core platforms, investment banking and wealth and asset management, the partners wanted to ensure that an investment offering would be able to be established in London. And a group of us started the office about 10 years ago now. And really, we've been patient. We've built relationships with the clients that we can work with and wanted to work with us. We've taken our time to make sure that, even though many of us have been working in London for a while, taken our time to make sure that we understand where Berenberg can work and how it can be placed in the market. And we've also waited for the investment performance to come through and the investment platform to be developed into the international offering that we have today. So we're really excited about the momentum that we've got, the team that we've got, and the track record that we're building. And we think that there's a really exciting opportunity for Berenberg to continue to grow in London.
And you mentioned there the business being built out of the equity research side. And I mean, to what extent do you think having the strong institutional business can be leveraged in the private wealth sector? What does it bring to the party for the private clients coming through your doors?
Well, I'm very glad you asked me that, because having strong areas of competence is critical to what we do and how we do it. The institutional equity stock pickers are world class and with proven track records. It means that if we can access that knowledge and that skill set, then we're delivering to clients across the business a consistent philosophy, a consistent execution of stock selection, and that should ensure that every client benefits. And it means we've got short lines of communication. It means that we should be able to be responsive and nimble when circumstances change with the companies we're invested in, or when new opportunities arise. And as the audience will hear today, when you've got a specialism in the small and micro cap space, you want to make sure that that can be properly used, or I don't want to say leveraged, because that would suggest something else, but properly deployed across the investment strategies, whether they're multi-asset or single stock equity specialists areas.
So we were about to share a webinar with Peter Kraus. Perhaps you could tell us a little bit more about Peter's expertise in the business.
Peter's been doing this for many, many years. And what do I mean by doing this? He has been scouring the market across Europe and indeed internationally. And I might touch on that a little bit. But across Europe for his entire career, he has extraordinary levels of knowledge of management teams and companies and the strategies, and has used that in order to assemble investment portfolios which can stand the test of time. It is not unusual for Matthias Born, who is our head of investments and with whom Peter has worked together previously at Allianz before both of them joined us at Berenberg. It's not unusual for Matthias to be able to find companies that he really likes that Peter might have been invested in for 5, maybe 10 years beforehand. That knowledge, that skill is something that is really quite unique. And Peter now runs probably the largest microcap fund of its type in Europe. When you meet management teams who have come across him, they frequently remark about how he seems to know more about some of the sectors and geographies they specialize in than they do. So he's just got this encyclopedic knowledge of the small microcap space, and something that we hope and we believe passionately people find fascinating and stimulating, as well as obviously an area of positive returns.
Thanks. And later in the autumn, we're going to bring a session on global macro trends, challenges that economies, societies are facing, and opportunities that exist off the back of that. I mean, how do you see private clients being set to navigate some of those challenges in their portfolios and invest in order to preserve and protect their wealth?
It's never an easy question to answer, and we're looking forward, having endured a very significant set of events over the last 12, 18 months. And I should try and answer this question without the use of too many cliches, David. Inflation is something that will be occupying people's minds. Interest rates and the interest rate outlook will be occupying people's minds. What do those two factors contribute to? Well, how do you diversify across your assets, whether you have a standalone multi-asset strategy or whether you're looking to have different strategies work with one another. In this type of environment, that is becoming harder and harder. Fixed income isn't necessarily the most alluring asset class right now. So that will occupy investors' minds, it will occupy clients' minds. The macro of ESG is an area that's something that I feel very passionately about. ESG has gone from strength to strength in terms of its awareness, its footprint, and its significance and relevance to the way in which investors are thinking, the way in which clients are thinking about their strategies and their sense of responsibility. And I don't think that's going to slow down anytime soon. We've just done a questionnaire, which we'll be publishing shortly, that's asked a number of ESG investors their attitudes towards the E, the S, and the G following the events of the last year, and that's something we're looking forward to sharing with you and hopefully the other attendees today. So I think that those are the kind of macro pieces, if you like, that clients will talk to us about, or we will discuss when we're setting or reviewing investment objectives. And alongside that, there's the inevitable conversation of equity values. I mean, year after year after year, subject to the volatility we endured last year, and from time to time over the last 10 years, the debate has been, what will happen to equity values? Surely they won't go any higher. And that debate continues to rage, and it's something that you simply do have to address without trying to simply say, we'll take a long-term view. So that's a constant challenge, I think, for every investment advisor and indeed for every client, and that's one we just have to embrace regardless of the environment that we're in.
Okay, well, many thanks for talking to me today, Richard. We look forward to sharing this with our members.
Thank you, David.